Hi, everyone.
Oh,
This is Perry. Yeah, no. And yeah, definitely love to share more of my background and how I became a founder. I think that's, hopefully it resonate with some of you in the audience as well. So just a quick background. I actually grew up in Hong Kong. I born in Hong Kong and then study all the way through Form 3 before my whole family migrated to the United States. And we actually landed in New York City. And so I went to high school in New York City. And after that, I went to Cornell University to get my undergraduate degree in computer science. And after college, I came out here to Silicon Valley because I really like to program. And I have been trying different things ever since I was in high school, actually. I would pick up a book and just learn about Perl, learn about PHP, and then start writing programs just to try things out. So once I finished college, I want to exercise that part of my brain and continue to build stuff. So I came out to Silicon Valley. My first job was at Oracle. And I went to different other companies like Guywire, and then eventually landed at Facebook, like what Edith was saying. And when I was in Facebook, I met a lot of really great people. And, and I was staffed to do this project, which is to investigate or to implement the payment system into the Facebook platform. So I have to really study and research on where does the money go on Facebook back in 2007 to 2009. And lo and behold, every single dollar at that time went to games. Like every transaction was game related. So that's how we learned about, making social games is a really, really good business. And a lot of people just spend a lot of time on Facebook playing games back then. And that's how we got the idea of creating a gaming company.
And then your founding team are all like friends from Facebook, is that right?
Yeah, I dragged two friends from Facebook to join me when we started creating Stormate, and my wife also joined the company as one of the co-founder to help out on, because me and my other friends from Facebook, we're all engineers, so she actually helped out on anything that's non-engineering. So the four of us basically co-founded the company, and that was 2009. And fast forward 12 years today, we sold the company in 2020, and then I stepped down as CEO in 2021.
Nice. So a few things. I think like your founding story is a little bit unusual. Well, unusual in the sense that typically in Silicon Valley you start a company and you start building and then you raise money. But in your case, you didn't raise any money at all. Like, why is that? Because you were so profitable from day one?
Yeah, that's a really good question. I think it's a combination of things. When we first started, it was 2009. It was actually very similar to today's world where like the whole world is collapsing. That was right after the 2008 financial crisis. And there were not that many opportunities to raise funding back then. You have the famous Sequoia thing where it's like, rest in peace, right? Good times. And then, it was really difficult to raise funding in 2009. So we pretty much have to bootstrap. And once we get the games going, the nice thing about being in games and anything consumer facing is that we get revenue relatively fast, because once we created the game, we see traction, and then we were able to get money from our user by providing them the game and the content. And then that got us going for quite a while. And yeah, because then after that, then we became kind of profitable. And so that's why we don't need to raise money. And we did explore, trying to raise money, but I think one of the things that we learn is that, it's really hard to find the right investor, especially if you don't have the capital need. So eventually we decided that, hey, we should just keep running it as a self-fund bootstrap company and maintain profitability throughout. So we've been profitable pretty much since 2009 all the way. Even today, it's still profitable, the company.
So in addition to like start up with basically 4 of you, and like how big is how many people like did Stormic end up?
Yeah, so we have our own ups and downs. I think like I said, we started small and then we keep growing. I think at the highest, we probably have like a little bit over 300 people. And then we hit our roadblock. So we have to downsize ourselves to about 100 people after the downsizing. So it's a really significant downsizing. And then I think at the time that we were selling the company in 2020, we probably have like around 70 people, 70.
Got it. Are you more like you started because like Facebook was obviously there's a lot of things happening there, and then it's more mobile game, right? It's not PC. So the type of genre is more casual game or like.
Yeah, so it's interesting how we kind of landed into that arena altogether. So I talked about we were working at Facebook at the time in 2009, and then we learned that hey, social games on Facebook was really taking off. But the fact that we were working at Facebook, we have conflict of interest, so we didn't feel right to make games on Facebook platform. And we were so fortunate that around the same time, Apple just created this iPhone and they opened up their platform. So we were like, hey, this gaming idea makes sense. Why don't we just make it on this new platform called iPhone and just try it out? So we started as a mobile developer day one, just because of that, not like we have any specific insight. We did have the insight of we think that the world is moving towards the smartphone. So that we do believe, because we were one of the early people who also lined up to get the iPhone, and then we were impressed by the phone, and we think that no one can ever go back to the feature phones. So that's the bet that we made, and then ever since then we just stay on the mobile platform. So we have never kind of make games for the desktop.
Nice, awesome. So before we go into sort of your investment now and your active angels, and you also sold the companies, like how does that came about? Like, was you actively trying to sell? Was it just sort of like one thing leads to another and you decide to finally sell the company? Well, knowing what you know now, what would you do differently in terms of exit?
Oh, wow. So we do have a plan to get liquidity for the founders and the employees. Like you said, we never. So it's interesting because we never raise outside funding. So even within the company, and we've been hiring a lot of people. We grant them options and stock, restricted stock units as they join us and as they kind of perform and work at the company. So they always question like, hey, are the founders ever going to exit? And we kept saying, look, obviously we need to have some kind of liquidity event at some point in time, because even the founders need liquidity, not just the employee. And we, by the virtue we granting them kind of equity from the company, we kind of implicitly, promise them that there would be some kind of liquidity event. So we always keep that in the back of our mind. And we talk to people from time to time, just like people who shown interest into the casual game that we were working on. And then Stillfront happened to be, looking around to do kind of a decent sized big deal to they were mostly on hardcore game for the longest time. So they were trying to expand themselves into more female audience and different types of games. So they were knocking on our door and talking to us. And we were intrigued after talking to them. We were intrigued about what they are about and what their vision is. And then one thing led to another, and then we got to that deal. Awesome. But the timing is really interesting when you think about it. When we talked to them, we obviously we were like working through the deal. There's a lot of things to discuss. We literally signed the deal on February 28th of 2020. And then after we signed the deal, like within 1 week, then the pandemic hits the North America, right?
Yep.
Which is March. And then pretty much after that, everyone needs to work from home. So it feels like we signed the deal, and then the next thing we know is like everyone disappear, right? Because we all work from home. And yeah, that just I just find it to be super interesting that sometimes timing could be a a factor into this, because I don't know what would happen if we didn't actually close before that. Like it might drag on, it might happen, it might not. And yeah, so I guess just pay attention to don't try to time it, and just make it work, make it happen.
Yeah. Anyway, congratulations. I think this is a great exit. And now maybe we can like sort of shift our conversation to your angel investment. So let's just to start with, why do you name your firm Locus Ventures?
Yeah. So when we, I can talk a little bit more about Locus and how we kind of come about. So I was still running Storm 8. It was like 2015, 2016. As part of like just running a company for a long time, you kind of get a little bit very narrow tunnel vision, because you kind of so focused on running your own company, you're so focused on the industry that you're in, which is gaming for me. And then I really needed to broaden my own view. And I always enjoyed talking to other founders and trying to understand how they think and what they do, and what kind of industry they're working on, new things they're working on. So I started talking to a few of my friends and see if they are interested into like co-investing together. So that's kind of the beginning of Locus. Is me and 3 other friends at the time, and then now we have the 5th partner too. So now it's 5 of us, but when we started it was 4 of us. And then we were like, hey, why don't we just like put our money together, create this fund, and then just talk to interesting founders and see if we can help them, if we can invest into them. So when we were kicking around trying to figure out a name, I think one of the partners just came up with this name Locus. And then we looked up the name. We thought that it's a very interesting word, because it beforehand I actually didn't know, but once I look it up, it's like the word actually means like a set of points that satisfy certain kind of criteria, maybe an equation, maybe something. So we feel like it resonates with what we try to achieve. Is like we try to create this fund to invest into companies that satisfy a set of criteria, right? The nice thing about this name is you don't have to specify the criteria. You just say that, hey, there's a criteria, and then we kind of like that kind of vagueness, because to be honest, when we started, we didn't know what we were looking for. We just like, hey, we're founders ourselves. My partners are all founders and startup operators, but we don't necessarily know exactly what we're looking for. So it was also a very kind of a soul searching and a development and research phase for us to figure out what exactly are the companies that we like to back. And it is great that we, after 6 years now, we have a lot more experience into investing, and then we see many more companies, so we have a better grip on like what exactly we're looking for and how we can help the companies.
Awesome. I just noticed like I included Locus Venture website in the chat, so everybody can check it out. So we actually have one common in companies, which is Home Court.
Oh, okay, just one.
Yeah, just one. Just for now, I'm sure we'll have a lot more.
Yeah.
But yeah, I'd love to learn more about the thesis. Like you're in Silicon Valley now. What is like in terms of geography you focus on, check size, what stage? Love to learn more about like what your focus is, range of check size and all that good stuff.
Sure. Yeah, we are an early stage fund. So we focus on seed and pre-seed. We our check size go from anywhere from 50K to 100K from the Locus Venture. But there's oftentimes that individual partners would invest alongside with the fund. So that would just, whatever amount that the individual or multiple individuals could invest. So we have also seen like things go up to like 200, 300K total. So I would say that would be kind of the general check size.
Okay, awesome. And then you are open Hong Kong companies, Silicon Valley companies worldwide?
Oh yeah, we go everywhere, but I would say most of our investments come from North America and Southeast Asia. I guess it has a lot to do with the backgrounds of the partners. The 5 partners now, we all have like kind of Hong Kong background, one way or the other. And actually one of the 5 people actually is in Hong Kong right now. He lives there and that's his home base.
Okay.
And so we know Silicon Valley, so I guess North America makes sense. Southeast Asia makes sense too, because given our background from Hong Kong, we're not shy away from investing into Southeast Asia. And we are very familiar with like the general landscape in Asia. So I would say those 2 are the main geographic locations that we've been making a lot of investment into.
Yeah, so on that note, like being active in both Southeast Asia and in the US, I guess do you prefer to lead or follow? And what's the sense of the market these days, like in terms of valuation for like pre-seed seed?
Oh wow. Yeah, we tend to follow because of the check size that we write, and also at the seed and pre-seed round, it usually it's just a bunch of angels. There's no clear lead per se.
Yep.
I think kind of valuation expectation. I certainly have seen a whole gamut of things. We do go to Y Combinator demo day quite a bit. So you see even more kind of variety in that demo day as well. But I would say usually what we are seeing right now is like 10 to 15 million valuation is kind of the norm. That was pre kind of this most recent downturn. I'm eager to see what happened in the next set of demo days, to see like how things shape up, because I'm sure kind of the public market not doing well, crypto not doing well, all those stuff would also factor into it now that we have a new chapter.
Yeah, in the last 60 days, it's been kind of crazy. So and I think in the impact of valuation for later stage, certainly one of the kind of crazy like Klarna, who's buy now pay later companies from the UK, was originally valued at like 46 billion and just did a down round at 6.5. So
that's right.
Really shocking like for later stage. But I think early stage is a little bit better, but it's definitely, I agree with like the 10, 15 most recent. Before is at least 30 or 50% more. Is just kind of crazy.
Yeah, I think that the more the company need to burn money, the less leverage they have when it come to in this kind of economic environment, right? Yep. So if your company is more solid in terms of like revenue generation and profit driven and all that, then you have a little bit more leverage when it comes to fundraising. So definitely encourage company to focus on that if they're not already.
Yeah, and in most cases, we're trying to get our founders to raise at least, if you do want to raise, and in Perry's case, he didn't raise anything, which if you make money, you don't need it, even better. But at least 12 or 18, if not 2 years in run rate, because it's tough time. So you want to make sure that you don't die.
That's right.
So Perry, back to you. So if I already raised some angel money, it's okay to talk to you, right? But if I'm like already at my series B or C, then forget about it.
Yeah, series anything beyond Series A would be really difficult for us to invest into. But if you have angel round already, or even if you have not have angel round, this is the first check that you're expecting, that those would be the best time to approach us. Yes.
Got it. So what would be like some of the key things that you look for in a founder, particularly for pre-seed seed? Sometimes many of them don't even have a product and don't even talk about product market fit. Like, we don't know yet. So what are the key things that you look for, in any pitching advice for founders meet you for the first time?
Sure. Yeah, and I would love to hear from you too. What you look for in your investment companies too. But I go first. I think specifically for the early stage, like you said, there's really like sometimes they don't have a product. I think the home court folks come to us when they don't have anything. It was pretty much just the team. Like they have a demo so-called, but yeah, it wasn't really like anything sophisticated. They don't have any number, right? You know, there's no like existing trend that you can look at. They probably are working on something that does not even exist. So we don't, that's why at least at Locus, we don't really pay a lot of attention to those things. We don't pay attention to like exactly what is the, you know, what is the grand vision or anything like that. But we do pay attention to the founder and the founding team. And the things that we look for might or might not resonate with some of you, because I think it's not as concrete, but at the same time, I think it's really important. So the first thing we look for is like, can they do stuff, right? Yeah, can they just do, like sometimes people come in and then they have like a lot of slideshow and then all that good stuff, but then once you kind of poke around a little bit, then kind of the story falls apart. Or you ask them, okay, when do you start? They tell you, okay, maybe 6 months ago, and then you ask them, okay, what is your progress? And then they show you like not so much. Then you kind of understand, okay, maybe this is not the team that we want to back at this moment. Not to say that they cannot create something great in the future. It's just that for us to invest into a company at that early stage, we gear towards more the founders who can make things happen. Like, because that's what it is about. This is like, at this stage, you have to turn from nothing to something. So if you can quickly turn nothing into something, then at least you can try a few times. And then you can, you know, even if you fail, you still learn something, right? So those are the founders that we first and foremost look for, is like, can they do stuff? Secondly is, if they do have some traction, we kind of look for like, do they do things slightly different than other people? Like, do they know something that other people don't know? And it could be a very small thing. It could be just an insight. It could be, you know, they tested this one thing and then that didn't work and this worked, things like that. Because again, we're not looking for anything specific. It's not like, oh, if you have this golden truth, then we think that you will make it. It's not like that. It's more like the process of how they are, you know, thinking about the problem set and how they're getting to a solution set. Because, you know, oftentimes those insights, like what I was telling you about, you know, how we started Stormy, is really like, we saw that games are making a lot of money on Facebook, and then we give it a try and we were able to make something, then we were able to have momentum. So sometimes we're looking for that kind of thing, is like a little bit of information, why they think about certain things and what sparked those things. I think those are the things that we kind of look for. I don't know if you have other thoughts.
Yeah, I'm really big on, since you emphasize, so we're the same. Like, so we focus on pre-seed, seed. We're very like infrastructure. So most of our founders, their customers are developers. Very technical, open source. We're really big on Web3, of course. So the key thing for us is really the chemistry between the founders. Sometimes don't get me wrong, I'm sure that people just met and a meetup can work out too, but it's just that it's just so much better to meet a team that have worked together before.
Mm-mm.
I think the number one reason, okay, don't quote me on it, I don't know if it's number one, but one of the biggest reason for early stage, a lot of times just the team don't get along.
Yeah, agree.
And because in the early stage, there's no one path. Like you're the boss, you have to figure out what needs to be built. And if there's things that you can't agree on and to figure out a direction, it's just tough. And then one other thing, I don't know if you've seen that, don't get me wrong, I think Hong Kong startup community definitely have improved a lot. But I guess because early stage in a Hong Kong environment is still improving. So sometimes when particularly over Zoom is tough. It's actually so much better if you do fundraising one-on-one or max maybe 1 to 2. But sometimes like some of the Asian founders will get like an entire team to meet, and all these it's just very, very tough to really get to know a person. If you're trying to get your entire team to meet the investor, please don't do that. So the key thing, I really agree with Perry, is the meetings with founders is really about wanting to get to know you, how you think and why. You don't need to have all the answers. And in fact, sometimes it's okay to say, I don't know. That's what we try to figure it out. But in addition to that, I'm really big on really just the size of the market. Sometimes I found it's a lot of solution looking for a problem rather than, a real problem. So those kind of fun conversation is always good to have with the founders. Anyway, so let's move on. I have a whole bunch of other questions for you, and so we can still have a little bit of time for open Q&A. What's your decision process look like? Do you usually the founder pitch you first, and then you bring in all your partners in, and how's that look like in terms of pitching you guys for funding?
Yeah, it's actually very simple. One or two of the partners would meet with the company and the founders, and then we literally have 1 hour conversation. Then the partner would bring back the information, share with the team. I would say 90% of the time we could make a decision just from that one meeting. If we have further question, we would go back to the founder and ask those questions, and before we make a final decision. But usually we would be able to just kind of make a decision from there, and then we just go.
Got it. Cool. Yeah. So with us, because we look at a lot of open source stuff, so sometimes before we even meet you, if it's open source, we usually actually play with the code.
Nice.
And check out what's happening. The product speak 1,000 words if you have one, but we completely get it. If you don't have anything, it's really so much of your understanding about the market and the pain point and how you're going to go about it. And more importantly, I think most of the idea that you work on, probably somebody else is doing it, and the likelihood of Perry probably met them before is high. So you need to do your homework and talk intelligently about who's your potential competitors. Anyways, really just a lot of conversation and how thoughtful you are. All right, I'm going to super rapid fire on some of these questions really quick. So Perry, what's your favorite portfolio company and why?
I don't have one favorite portfolio company, to be honest with you, because I love them all.
Okay, man. Okay. Is that one company that you wish you did invest, but you didn't?
Yeah, that's one. Scale API. So I think it's called Scale.ai now. So we actually met them back in 2016 when we first started at YC Demo Day, and we liked them. We reached out, we liked them, we talked to them. When we tried to invest into them, they weren't got oversubscribed, so we didn't get any allocation. So the ship has sailed at that point on, and now they are obviously doing really well. And so yeah, we wish we were able to invest into them back in 2016 when we first started.
Okay, good to know. Who's your favorite founder of all time?
Favorite founder of all time, I would say Ben Horowitz.
Oh wow, cool.
Yeah, I like his book, The Hard Things About Hard Things.
Yeah, highly recommend. I really like that book.
Yeah.
Any favorite investor of all time?
Paul Graham.
Oh, PG is cool. He write many awesome essays, which I highly recommend. I guess it's tough these days, like not that much physical events is definitely coming back, but like if any founders come to Silicon Valley and want to check out one event, what would that be?
YC demo day.
Okay. All right. Any tech media that you read on a regular basis?
Hacker News.
Definitely. Okay. Okay, I get the sense that you really love YC.
Yeah,
Right.
I'm very plugged into that network. Yes.
Cool. I guess like if we get your investment, usually what sort of help do you guys like? What sort of things that should I seek out for advice and my ask be?
I would say given the kind of the partners that we have, there are a couple of things that stand out. One is we're all startup founders and operators, so we understand the founders' kind of difficulties and hardship very intimately. So we love them to ask us question. Like there are lots of like operating questions at the early stage that I think sometimes founders are very shy to ask. So we love those questions, like how do we make our first hire, for a non-technical, role, something like that. What is kind of, should I get a recruiter? Like I actually literally, like people ask me that all the time. Like, is there any benefit of getting a recruiter? Things like that. I would say we also use us as resources because we are very technical people. So if they want to make a technical hire, they want a second pair of eyes to just like talk to the candidate, vet it out, we're more than happy to do it. And one of the partner has the capability of like really like data analysis and doing data kind of driven decision. So we can certainly help our founders to run some data and just like point things out. So I think those are the things that we tend to be helpful.
Got it. Cool. I'm going to switch topic a little bit and then open up for Q&A in a few minutes. Perry, since both of us in Hong Kong, the whole point of Founders Hong Kong is to, obviously I can't wait to all go back to Hong Kong soon. I don't know when, but definitely by end of this year, at least for me.
Good for you.
What do you think about like the startup ecosystem in Hong Kong now, even though mostly through virtual, and what can be improved, like from your point of view?
So I have to say I'm not super close to the Hong Kong startup ecosystem, to be honest. Like I'm not as plugged in as you are for sure. But I can make a few observation or just my limited knowledge of what it is, like how I'm seeing the puzzle. I think Silicon Valley has a very unique situation, and it took a really long time to build Silicon Valley. So I actually think, despite it, if it's Hong Kong or other places, I actually think that if other cities want to have a startup economy, they really should not pay too much attention to Silicon Valley. Like they should know that Silicon Valley exists, but it's hard to replicate by itself, right? And it's been so many years ahead for Silicon Valley. So you take a snapshot of the current day of Silicon Valley, like it's hard to analyze what made it work and all that good stuff. But I think one way to improve or get a startup economy going is like you actually use kind of the startup mentality, right? So maybe the first thing that I would say is if Hong Kong or other cities can focus on like serving a niche market really well first before they expand to the bigger market. So in this scenario, it's like don't create a startup economy of like general startup economy, but maybe be more niche in a specific types of startup economy. So maybe, I'm just drawing up really random example, like maybe focus on NFT or Southeast Asia focus startup economy or logistic related, or maybe EV related, like something that you think the market is underserved, and you can create a niche market. So once you build that beacon, then you will start attracting a lot of relevant talents into the city, into the space. Then those people can start building on top and expand outward, right?
Yeah.
So I think if we kind of take that SAR mentality and superimpose that onto like creating startup ecosystem, I think it could also apply.
Yeah, I totally agree. I think there's no point trying to be Silicon Valley, because every geography and every city should have their own
That's right.
positioning and branding, even for a city in terms of startup ecosystem. I'm going to bring up Dylan. Dylan actually quite timely. He actually wants to learn more about our view on Web3 and gaming. I'm going to bring up Dylan to show your video. You can maybe just quick intro of yourself and then your question.
Sure. Thanks, Edith. Can you hear me now?
Yep.
Yes.
Oh, great. So this is still an EdTech founder, but I'm planning to get into the Web3 crypto gaming space. Since Edith has a very strong background in Web3, and then Perry definitely in gaming as well. So I want to understand your take on crypto gaming. Do you think that a lot of people promote the pay to earn, play to earn concept, right? But then do you think that the tokenomics, or whether it can last? And then what do you think are the opportunities in crypto space or crypto gaming space at large look like now? Thanks.
Great. Yeah.
Perry, you should totally start first, because I'm not really investing in gaming. So
yeah, so I can share with you my own opinion on this. So I actually think that crypto space, Web3 and gaming is a thing. Like I think there's a real synergy there, but probably not for the same reason that you post there. Like I don't think play to earn is going to be the thing. Here's the fundamental. Like for gaming has existed many years. Like even before video game, people play games, right? They're board games. They're like games we play in the playground. So gaming by itself is definitely a thing. It's an entertainment, right? It's a form of entertainment. We just have all this different technology and platform that allows you to entertain users in a different way, either at scale or digitally or whatnot, right? So but then at the end of the day, you are providing an entertainment experience to the user. So I would say focus on that. If you like gaming, this is what you're doing. You're creating an entertaining experience for your users. As long as you can do that, then gaming is perfect for you, because then you don't care whether you make the entertainment experience on mobile, on desktop, real world, offline, online, doesn't matter. Like you have to focus on making that delightful moment, entertainment experience for the user. But where the Web3 comes in is gaming tend to thrive when there's a new platform that come about. And that is usually kind of the best time to get into gaming. You don't want to get into gaming today for mobile, because the mobile has been around for like 10 plus years. So if you go into mobile gaming, you're just competing with all the existing players, and it takes a lot of resources, capital to compete, because they are well capitalized. But then gaming is a good thing to enter when there's a new platform, like back in 2009 when I entered into mobile. Even further out, like when Facebook first opened up their platform, even before that, when Nintendo and all these other companies created those console, like those are really good time to enter into gaming. So I would say that Web3 is similarly in the sense where it creates a new platform for people to try things out. So if you think you have a good way of creating a entertaining experience for your users, then try it on Web3. I think it's going to be a really interesting experiment.
I'm going to quickly chime in on this, even though at Raise, we don't really invest in Web3 consumer. We're really big on, obviously, on the infrastructure stuff. So Solana, FTX, happy to chat about that. But I think you definitely need a real game expert to invest for one. But obviously, you know, the Axie Infinity came from Vietnam, and they raised, I don't know, gazillion dollar from Andreessen. So it's absolutely like possible being in Asia and grow a big consumer company. So Southeast Asia is super interesting. They're young, and mobile payment is not as, I guess, there's no, mostly on Android, and it's prepay market. So the use of crypto is interesting because in the US, I felt like a lot of the really interesting invention in that sense will come from Asia, in fact. Not alone, like I think it's so interesting on the, actually, Perry, on this note, what do you think about NFT or NFT related companies?
I think that is a good combination with games. Like, to be honest, I think, you know, think about, like, again, they go back to, like, you have to create a really fun game for people to play. But then NFT and all this stuff allows you now that you can potentially transact on whatever things you create or you collected in this game. I think it could potentially create a new format for game developer to have a different economics, right? Have a different economy that is going on that would, you know, unlock some kind of gameplay that we have never dreamed of before. So from that perspective, I'm super positive and you know, feel very excited about the NFT development, because I think that enables this to happen.
Awesome, cool. Thank you, Dylan, for your question. I'm going to
Thank you both.
put you back
Sure,
at the attendees, and now we have our next question. Chun Wing is joining us via video. I'm guessing he's in Hong Kong, but please introduce yourself. Please quickly introduce yourself and then ask your question.
Yeah, hi, Edith and Perry. Nice to meet you guys. And I'm Rain. I'm founder of Scanner. We are actually connecting traveler to local brand and local business with our app. Meanwhile, we try to build a database to help local brands grow. So my question is for Perry, when you do the investment with the funding team, or do you consider, or do you think it's a must for all the founders to be full-time commit? And can you tell me why and why not? Thank you.
Yeah, that's a really interesting question. Do we need, I wouldn't say we specifically look for that, but then if they are not full-time, it will raise the question of why. If they provide a really good, solid answer to it, then sure, like maybe some folks needed, you know, they cannot commit for this reason, and then they would commit like at some point, blah, 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 blah. Like, if they can answer that question of why, then that's okay. But if they don't have a really good answer, then yes, I would question, okay, if you're not kind of all in, then why would the investor be all in, right? So yeah, so I think that's a really interesting question. I don't know, Edith, do you have a different take on it, or like, how do you guys view that?
Definitely, like for me as a fund, definitely not. Not like, it's one of those things where if the founder is not willing to put skin in the game with their time, like why just sort of like, if your friends ask you, give me some money, but I'm not working on it full time, it's really the same mentality. But I get it, like sometimes it's scary, right? Like and particularly in Hong Kong, you know, things is very expensive, and you want to make sure that you have put food on the table. So I get it. But so sometimes, like when that happened, let's say ex-Facebook and Square engineers working on certain things, usually we will make them promise, if you raise this, you got to quit. At least a commitment to quit, so we know that you're going to be in this full time. But of course, we get it. Like, we don't want our founders to staff. Like you need to eat. But it's one of those trades-off. You wanted to let the investor and your employee knows that you're in it 100%. So it's a commitment on like you will. That's the reason why. Thank you for your question.
Thank you.
And thank you.
And just a second.
Oh, shit. Too late. When you have to type your question, and then I will ask Perry over one-on-one. All right, I have a couple more questions, and then we're gonna end the session with a game because I'm always trying to be on time. We'll get our 2 minutes back. But really quick, so on this note, which is really interesting, what are some of like the top 2 or 3 tech trend or investment trend? Obviously, sounds like you're really into like Web3 gaming, probably because you're a founder of a gaming company. Like, what would be like the top 2 or 3 trends that you're excited about? And I'm gonna end our conversation with a thumbs up, thumbs down, so everybody got to learn like what you're excited about. So actually, not the game yet. What would be like 2 or 3 trends?
Yeah, so I think, obviously, Web3 and crypto, it's definitely a big trend. If even myself, I'm spending more and more time on that. I think anything that has to do with like trading and finance makes kind of sense to go into crypto. There's some underlying technology need to get hashed out. So if people are working on that, that would be a big investment trend there. But I think that can go really far once some of the underlying infrastructure is hashed out. And then I would say that's first and foremost off the top of my mind.
All right. I guess we're similar, except we're definitely more on the developers tools infrastructure side, less so for the consumer. But yeah, I do think also like recently, a few things, there definitely more and more adoption on folks who have no idea what a wallet is. And now we're seeing a lot of sort of the Web2 payment infrastructure going into wanting to buy NFT, but using their credit card. So like that sort of payment rail, we're seeing here sort of like a crossover. I haven't decided if I'm going to use the word Web 2.5, but we're definitely seeing more and more. On the Web3 space, a lot of DAO tooling, that's interesting. A lot of things is happening on the DAO, and how do you keep track of that? How do you pay based on the tasks that they perform for the DAO? We in general just really like also like any sort of DevOps tools to help save costs. Anything data related to on the crypto space, because right now everything is on the blockchain, so but it's only by wallet address. So we're seeing more and more interesting tools that could potentially be built. Okay, with that said, I'm going to end our session with like a quick, so Perry and I'm going to just say like these certain word, and we're going to thumbs up, thumb down. Not saying like this is not a good industry, it's more or less it's things that we invest in or not. Okay,
personal
really
interest, yes.
Yeah. All right, so Web3 gaming, actually not for me. Web 2 gaming.
Yeah.
Really? Okay, interesting. Interesting. NFT. I do this because not NFT for consumer, but it's any sort of next WordPress NFT. I'm super interested. All right, DeFi. Okay, awesome. Healthcare. Oh, clean tech. Okay, no clean tech. Quantum computing.
What?
I think it's cool, but we'll see. Hardware. Anything hardware related. Yeah, not for us. It's very, very tough. IoT. I guess I don't invest in a lot of things.
IoT.
No. Okay. FinTech. I actually do invest in FinTech. Okay. Enterprise SaaS. Okay. Awesome. Developers tools. And then last but not least, ESG. Yeah, not for me either. All right. No. So with that said, we could not see his response. To some Perry basically really focused on Web3 gaming, anything crypto related, but also open to enterprise, fintech, and developers tools. So that's sort of the summary.
That's right.
Our interest is quite similar. With that said, final question, Perry, what's the best way to get in touch with you? So if everybody wants to pitch you from this call, what's your email, follow you on Twitter?
Yeah, to be honest, I think the the best way to get in touch with me in terms of like, pitching would be finding someone I know and then go through that channel. Like any cold email and kind of LinkedIn pitching doesn't work for me. As a matter of fact, it's kind of a negative if you have to kind of reach out that way. So do try to find common friends on LinkedIn so that someone can make an intro for you. I think a lot of kind of investors are similar in the way that they, it's just too many email coming in. It's hard to kind of filter what's the quality. So using our own network as kind of the first line of defense in that sense. But then, so if you can just do some LinkedIn searching and then make sure that you get a warm intro from someone, I think that would be the best way to reach out to me.
Yeah, so the biggest tip for this audience is go check out Perry's website, and you can basically figure out all the company he already invested in. The best referrals always coming from the founders, a particular investor already invested.
That is absolutely true.
Referral. So do your homework and find commonality. And plus, doing that research, you figure out maybe he already invested in your competitors. So you would not want to pitch him. So with that said, thank you for the great advice. And yeah, thank you, Perry. I'm so glad that we get to do this. But
thank you very much.
Catch up in person and find time and talk shop. So
yeah,
thank you so much, guys, for joining us tonight or in the morning in Hong Kong. We'll see you next time.
Thanks, everyone. Bye.
Bye, guys.